Hey everyone, welcome back to the Real Estate 101 podcast. I'm your host, Robert Leonard, and with me today, I have Giri. Giri, welcome to the show.
Hi, Robert. How are you today?
Doing well. How about yourself?
Doing great.
Despite being such a popular and big industry, technology has really taken a long time to enter the real estate industry. I'd say that it's probably started over the last, 5 or so years, but it's certainly been a lot slower than some of the other industries. So why do you think the adoption of innovative technologies in real estate has been so slow in real estate?
Very interesting question. What has happened over the years is real estate is not at the cutting edge of technologies. Everything, moves much slower. Primarily, because of the regulations and, the regulations obviously move slower than the technology itself. And given the complexity of the real estate industry, every state has its own regulations. So, it adds to the complexity. There is no national guideline for anything, right? So you will see that, real estate transactions still happening on wet signatures and, wiring money or, like cashier's check and things like that. So from literally identification of property till closing and managing the property, etc., every step of the way, technology is like maybe 15 years behind or, sometimes even 20 years behind. One of the funny things I keep, hearing from, my colleagues in this industry now, even though I come from tech industry, right? For us, like if somebody says tape, that's like mainframe days of, 1980s and 90s, right? Even today in the real estate industry, the standard term is data tape. What is data tape? So, it starts there, right? It starts with the recording of the transaction to everything. So, everything is like 15, 20 years behind.
As a technologist and a business guy, you must see kind of just the lack of technology in this industry as a huge opportunity.
Absolutely. Literally every area that I look at is, at least 10 years behind. So, like everything, we can, jump to today and then leverage, the tomorrow's technology. So I see massive opportunities in every step of the way.
What brought it on your radar? How did you realize that there was a disconnection between technology that's available in the real estate industry and the real estate industry? And what are you doing to kind of close that gap?
Yeah, my entry into real estate part in the US was a slightly accidental one. I had, taken one company to Nasdaq, and after that, I was trying to figure out what next as my big, opportunity. And one of my friend, called me saying that she was trying to buy a Airbnb property, and that was some $400,000, and she had to put $100,000 as the down payment because banks expect 25% down if it is a short-term rental. And she said, hey, I don't have 100K. Can you solve this problem? Right. And that is the origin of I getting involved in this space, and we created reAlpha around it to solve. How do you, analyze the property? How do you buy the property? How do you manage the property? That entire life cycle of property management, right from property identification to, the end goal. I see that, there are technology gaps that we can bridge. That's what, we are working on in reAlpha.
AI and machine learning, I would kind of classify those as buzzwords. So explain to us what exactly those mean for somebody who's not in technology. Explain to us simply what AI and machine learning are, and then also explain to us how those work in the context of real estate investing.
Yeah. So, AI and machine learning, over the last maybe 10 years have really taken off, even though, almost 30 years back, everybody thought AI will take over and things like that, right? So, it has come a long way because of the computing power, that has improved. What truly, at a very layman terms, AI is how do you, analyze large quantities of data, right? So, how do you create intelligence out of it? And then machine learning is how do you train the machine in such a way that, it can do much better. Right? See, you and I humans, we have human constraints. For example, we can't work 24/7. We can't analyze large volumes of data. We get fatigued and stuff like that. A machine doesn't have to, right? So if you train the machine well, if you give it the right models, it can, move at like 100x, 1000x faster. For example, you and I, if we have to analyze at an individual level, maybe one property an hour, two properties an hour, we can analyze. But can we analyze 10,000 properties or 50,000 properties, 100,000 properties? There is no way. So AI and ML will help in those kind of analysis. And that is just the beginning of it, right? There are two kinds of data, structured data and unstructured data. Probably structured data is fairly easier to analyze, but the moment you throw in unstructured data, for example, we still believe that AI hasn't really reached its peak. How do you analyze a neighborhood? See, like if you want to buy a house, what do? You take a look at the pictures, etc., etc. And the next thing that you do is drive around the neighborhood to see whether, that matches your expectation, right? From the exterior, how does it look like from a human eye? These things, are still in the early stages of the technology. Machine learning is being trained to analyze the right kind of property, pictures, like is the kitchen really nice or not? A human eye can analyze it much better than a computer. But the more we train the computer, it gets better and better. And eventually, it will do a much better job than the humans themselves. And it has happened in every other field, right? For example, chess, right? It's been already about 10, 15 years that, chess defeated, computer defeated a human. And now, like Go, Google built that AlphaGo that defeated even in Go. Go is supposed to be the most complex game, right? So like the technology is, like making significant advances. And then, we can take all those into, this world's largest business opportunity, right? I read somewhere that the global real estate value is $370 trillion or something like that. So that much of, asset class, how do you analyze? Obviously, AI and ML will be the way to go forward.
Do you consider a lot of the real estate data to be unstructured? I know when I try to look up data, it's like you said, not only is there no laws, is there no common laws across states for the most part. Every state has their own laws, they have their own regulations, their own forms, and it's the same with data. If you try to find data on a city or a neighborhood or a county, the way you do it for one city, neighborhood, county in one state is different than you do it for another. And so for me, it can make it super hard as a human even to analyze the data. So are you running into that issue with AI, and is that considered unstructured data?
Actually, the question has two parts to it, right? How unconnected these pieces of data, even though everybody says MLS, right? But MLS is not one MLS in this country. There are 560, I think, odd MLS databases. Every state has multiple MLSs. The larger the city, there are multiple MLSs and so on. Imagine 500 odd, 560 odd MLSs around the country. They are not connected to each other. They don't talk to each other, and so on and so forth. That's one part of the problem. Second part, as you were saying, we have federal laws, state laws, county laws, city laws, and even within a given city, between zip code to zip code, half the zip code will be zoning, from a zoning perspective, it is commercial, some are, mixed in some. So, and unfortunately, none of this data is centralized, easy to access. And if it is, and every little county has its own form, its own way of doing things, and majority of them are structured, or there is no standardization of forms that you need to fill. Some are bilingual, and whatever complexity you can think is there in the real estate field, in any field. So probably the only other industry which is as complex as this is healthcare.
If you can even find it. If you can even find that data.
That's the other part, right?
Yeah, I can't find it. When you mentioned zoning, I was actually looking for some zoning information the other day for a property that I was looking at buying. And it was like, not only was it hard to find, but I was eventually able to find it. It took me forever. And then once I found it, I could barely read it. Like I think they scanned in like an old document that they wrote in with on like paper and it was just so hard to read. I'm like, there just has to be a better way for this.
Yeah, for reAlpha, like we, trained our algorithms and built our AI, etc. We have analyzed some 128,000 as of today. Imagine analyzing 180,000 properties. It's just insane.
What that AI that you've formulated, I know it's proprietary, so don't give us your special formula, but just give us an idea what metrics or characteristics of properties and neighborhoods and cities that you're looking at when you do this analysis, and where is it getting its data?
Yeah, so like we have built our AI, from variety of factors, right? We use 25 and another 28 elements to decide whether we should buy a property or not, and that starts there, right? The things like like how is the neighborhood, is it close to a good school district, how far is it from attractions, and so on and so forth. For us, our criteria is the property Airbnb viable? That's the market that we are in, right? And we collect data from multiple sources, multiple ways we collect it. We leverage machine learning to train every time when we analyze. And most of the times we reject a property. When we reject a property, we help our machine learning to learn that why we reject it. So next time, like if a similar kind of property comes, it rejects automatically. Right now, we have already, come down to, like maybe almost on a lighter note, like an Ivy League elimination process, right? So 6% is the Harvard, acceptance rate. How do you bring that? So it's like a large funnel and comes down, and then we pick only certain properties, and then we build another app called Humint. In our case, what we have done is our AI doesn't help you to make the decision. It helps you to eliminate the properties that you don't want to buy. Then, we built an app called Humint, Human Intelligence, as a add-on to the artificial intelligence, because we still believe that human intelligence is very critical in making the right decision. Because nobody can claim that AI has figured out. If somebody is telling you that, they are not a techie. Non-techies can tell stuff, but I'm a techie. If I tell something, I like to talk to my techie friends. They laugh at me if I say that AI has figured it out. Right? AI can help you to recommend. AI can help you to reduce the human analysis, but eventually you need the human analysis.
So where is that human in the loop right now?
So like let's say there are 100 properties, right? We analyze 90 of them and then eliminate it. And then rest of the 10 goes through the, next level of, one more filtering that we do. And then, like we have built an app wherein gig economy workers from around the world can look at some of the images and stuff like that, where AI cannot easily rank those images. And that is where the human picture comes in. And then we take both the scores, AI generated score as well as the human score, and we create a hybrid, and then that becomes our score. And then final decision, it'll be like maybe 3 or 4 or 5 of them is what humans will analyze.
Is the AI and models flexible to change as new things change? So let's just say prior to COVID, more people like to live in a city than like to as soon as COVID hit, right? So you might have different metrics saying that a city is a great population versus, especially with Airbnb. I know that like drivable destinations for Airbnb did really well when COVID hit, but a lot of destinations that you have to fly to didn't necessarily do as well during when COVID first hit. So there's some of these things that could change, and maybe it's not a global pandemic. Maybe it's just a trend that comes up and people want to live in the suburbs, or they want to go back to the city, or whatever the case is, they want to live in the mountains. Can the AI be flexible to know what's important at the time as it's changing?
Yeah. See, like machine learning is pretty much like training a child to talk, right? If you train the child to use a certain kind of words, and then like the child learns and picks it up, right? Same way, if we give our machine learning algorithms the right kind of training models, it can pick up, and then automatically the next time when a similar kind of situation or slightly different situation comes, it is again every day AI and ML is developing. Newer models are coming, newer methods are coming. The more we feed the data, the right quality of data, and so on and so forth, the AI will be able to detect that kind of changes. And obviously, there has to be some human input into that, changing the direction a little bit. But eventually, it will become smart enough that it is almost like self-driving cars kind of situation.
There was a small real estate company called Zillow recently that very publicly had a big failure leveraging some sort of AI or machine learning technology to do their iBuyer program. If a company such as Zillow isn't able to do it, and I know they're doing a different model, right? They're doing iBuying, they're doing flipping, and you guys are on Airbnb space, but what makes you confident that you and your team can pull it off with AI and machine learning when a company like Zillow wasn't able to?
No, see, again, Zillow has done an amazing job. So, I don't want to criticize or anything like that. I'm very respectful of what they have achieved and, how they have, built a great company. The challenges of iBuyer were not just technology. There were global headwinds from a supply chain and logistics and human labor issues, and labor market is super hot, et cetera, et cetera. Right? There were multiple issues that went in. But one specific thing that we had anticipated 1 year in advance was, don't make that buy decision based on the algorithm. Use it to reduce the number of decisions that you are going to make. And then we had already anticipated that human intelligence is necessary, and we built this human app. Hopefully, that is the differentiator that as we evolve to the next stage. Again, there are lots of intricacies. It's not like one thing went right or wrong kind of thing, right? It's a combination of things that help make a better decision. And like AI can be a decision support system rather than a decision system.
In the stock market, there has been flash crashes like Black Monday, and that was similar to like AI or machine learning. Some sort of algorithmic trading failed and caused a massive crash. So I know you've mentioned that there is human intelligence involved as well, and it sounds like it's just filtering it down for humans to make basically have a better pool of properties to analyze. But do you think there's a possibility where something like a flash crash could happen in the real estate industry from AI and machine learning?
I doubt, because see, if you look at all these iBuyer programs and like all the so-called large buyers that are buying properties, if you look at it, it is still a small drop in the big ocean kind of, right? US real estate is so big that even the largest player today of single family residences is a company called Invitation Homes. They are still, maybe 88,000 homes or something like that. 14 million transactions happen on a year basis. It's still very small. I don't think, it has reached a stage where, but, if you look at the stock market, today, algorithmic trading, where machine learning and AI does the trading, that's like 45-50% now. And it is increasing very rapidly, and very soon it'll all be systems which are driving. That is what led to that crashes that happened, and flash crash, and etc., because of the algorithmic nature of financial transactions. Luckily, what has happened in that side, SEC and Nasdaq and all the computerized trading, etc. I come from the financial services trading side, so I've been involved very deeply about those algorithms. So they have, they are like probably ahead of the technology curve, right? In some cases. So real estate, as I told you, it's 15-20 years behind. Just to come to the current, wherein maybe let's say 20% or 30% of the real estate transactions are happening through technology. We are years away from that yet.
You mentioned a little bit ago that you got into the short-term rentals, which is Airbnb, VRBO, things like that, because your friend was looking to buy one. She didn't have 25% to put down. There are 10% down programs where you can buy vacation homes. So, and there's so many other ways you could buy real estate other than just short-term rentals. So why did you choose, what is the overarching thesis or idea on why you chose short-term rentals?
See, Airbnb is operational in 220 countries, right? It's a massive, opportunity. Airbnb is already worth $100 billion now. They are growing rapidly and they are consolidating in every market. So we wanted a global opportunity which is growing, and there is secular transformation from hotels to staying in homes. And COVID simply accelerated that whole process. That if you are a family, let's say if you are a family or friends of 6 people, if you want to go and stay in a hotel, you'll have to book at least 3 rooms, right? The cost of the 3 rooms versus one house with 3 bedrooms. I mean, simple math tells you that Airbnb is going to be cheaper and better because it has a kitchen, so you can make something and eat and etc., right? Especially if you have kids and so on, like everything changes. What we are seeing is this trend is not limited to US, across the world, right? So we believe that that opportunity will give us a mega opportunity to grow with that rising tide. That's why we picked, short-term rentals.
Are you focused specifically on short-term rentals or Airbnb? Because do you have platform risk from Airbnb?
See, like right now we are only on Airbnb because we believe that they are dominating the market. They are like about 40% in market share, and they are the leader, right? And in any technology platform, you will eventually have a tech monopoly, whether you like it or not. Google for search, social media, Facebook, news, Twitter, and so on and so forth, right? We think that may be the way here. So like right now we are in the learning mode. We are a small company, so we have to figure out one platform first before we go to the other ones.
Does anybody else love getting their day kicked off with a warm cup of quality coffee? Well, let me tell you guys about the coffee upgrade I recently made. Instead of rebuying the same old, let Trade Coffee send you something freshly roasted that you're literally guaranteed to love. Trade Coffee sells the freshest roasted and ethically sourced beans from America's best local roasters. They ship free to you as often as you'd like, whole or ground. Trade's real coffee experts taste test over 500 roasts, and their quiz matches you to your ideal coffee based on your taste preference and brewing method. They also guarantee you'll love your first bag or they'll replace it for free.
How do you think of potential recessions and the impact that that could have on short-term rentals, and then as a second order effect on your business?
Yeah. I mean, like I am not sure whether there is going to be a recession, like what we saw in the 2008 or 2000, etc. The primary reason is the Fed, and Fed is done so much of money into the market in the last 20 months. I saw somewhere in some magazine that G20 countries printed 40% more money than ever. Imagine, what will happen, with that, 40% money. That is why inflation is all around, right? On last Friday, the inflation data came in that, in US hit 7.5%, highest in 40 years, right? So are we at the doorstep of a recession? Maybe, may not be. There is a correction around, for sure. We have been on a bull market for a long time. So correction is going to happen. Is it a 5%, 10%? It's very hard to predict. I'm not an economist. I'm a tech guy. So, but how we are looking at it from short-term rental perspective is, if there is a recession, people will become more cautious of spending. At that time, they want to find cheaper ways. If you are a family and, going on a vacation, or if you are a corporate team which is going, etc. Those are the, kind of targets that we are going after. And from a property perspective, we are taking a much longer view. See, any recession will not sustain for more than 2-3 years, right? Eventually it will get corrected and comes back. And we are taking a much longer view of 15-20 year kind of models in our forecasting.
We talked before about how there just doesn't seem to be any normal laws or formality across laws and regulations for real estate across states, counties, cities. So with Airbnb, I found that there's even more laws and regulation. So are you concerned with increasing laws and regulations around short-term rentals and how that might impact your business?
Yeah, see, again, Airbnb is, one cycle behind things like Uber, right? See, when Uber, started going into cities, every city had, medallion owners, and, they resisted, and, taxi companies, they resisted that, you shouldn't be allowing Airbnb and things like that. But eventually, it got corrected, right? We believe that the same thing will happen to short-term rental industry. There will be some pushback in some cities, and for example, New York City has bunch of restrictions, but outside New York City, all the other boroughs, it's okay. New Jersey is okay. Like that, every area there will be some pockets of resistance, but rest of the country, it's going to be okay. But the market is so big. Even if we become some 50,000 homes, we are still a small drop in the ocean.
I want to talk a bit more about your business model. First, how is reAlpha an investor in every syndicate that goes through the platform? And do you get on your website, you mentioned that you get 51% ownership. Do you get that 51% ownership simply for facilitating the deal, or is reAlpha putting money towards the required down payment?
Yeah. See, what we have done is we are doing a Regulation A offering, Reg A offering, where the investors are investing in the portfolio of all the properties that we are going to buy. Once we buy the property, put it on Airbnb, then we will be offering it to our syndicate members. At that time, the company will be investing 51% in the equity, and 49% will come from the syndicate members. So we own 51%, and hence we take 51% of the revenue, net revenue.
We've talked about it quite a bit here on the show, but it's been a while now. And it's also a little bit of a different context here. So break down for us what exactly a syndicate is and how it works with your business model.
Yeah. See, the thesis that we started was 60% of Americans don't have money for a medical emergency. That's the unfortunate reality of the country, right? So I came to this country with $65. I know, how hard it is to figure out how to invest in anything. So first of all, survival itself is difficult. How do you, allow people who don't have access to invest in an asset class like short-term rentals? That is where we started our journey. And what we have done is with that syndicate member model. So, in every property, there will be 4 syndicate members for that 49%, 12.25%. So, we have figured out it can be as low as 2,500. Eventually, our long-term vision is, can we help it to, let's say you want to, own a piece of the short-term rental property. Can we help you to, come with zero down and then still be able to make? For example, today, for a car leasing, right, you can, go and, drive a car out with zero down. Why not for, this thing?
When it gets into kind of the nitty gritty or the tactical part of owning real estate, specifically with your Airbnb properties, who's actually doing the property management?
Right now, we have partners that, we use for, property management, because, obviously we are not a property management company per se. What we want to do is enable local companies to help us. Right now, we have national partners, but eventually we want to work with smaller regional firms who can, set up such kind of entities that can be put on the market. That's what we have done so far.
What if one of your properties has a loss for a month or 2 or even a period of time? Who covers that? What if additional money is needed for not just losses, but repairs or maintenance? Are the syndicate partners having to come up with the money, or is that covered by reAlpha? How does that work for you?
So, for up to about 6 month kind of, loss that happens, if by chance something goes wrong, we have a reserve fund which will take care of that. Then, if anything goes beyond that, we have 2 levels of insurance that, covers if something goes wrong, water heater breaks, or, something, some flooding happens, because somebody, forgot to turn off the water. All those problems will happen, right? So we have taken as many situations as possible into our financial model and then built it. But, if everything goes wrong, see, when we designed our system from a buying perspective, there are two elements that we consider. If everything goes wrong, Airbnb, yields are not okay. At that time, there are two choices for us. One, to put it on long-term rental or sell the property and get out, right? So, we have factored such kind of risk mitigation into our buy process so that, we don't regret later.
One of the major issues with buying real estate with partners, which is essentially what you're doing with a syndicate, or even investing in equity crowdfunding, which utilizes Reg A as well, at least historically, there is a lack of liquidity. Explain how reAlpha's model can actually provide liquidity to its investors.
Yeah. So, for the Reg A investors who are, investing now, we see, we have time till, SEC allows you to go up to 1 year for that capital raise. We are only, 3 months, not even, 3.5 months or something like that into it now. What will happen is once we, close the Reg A offering, we can either list on a ATS or on a national exchange like Nasdaq, etc. I have the experience of taking one company to Nasdaq. I think, I'm little qualified to, do that one more time. Obviously, we can't predict, when we will do that. The board will decide when we should list on an exchange. And obviously, we have to qualify to be on the Nasdaq. The moment we meet the criteria for being listed on Nasdaq, at that time, the management and the board will take a decision to file with the SEC, etc. There is a huge setup process that we will have to do. Alternatively, SEC allows that Reg A shares to be traded on an ATS. It's called an ATS, alternative trading system. So probably we will put on that if we don't decide on a national exchange. So that is how the liquidity elements are covered for Reg A investors.
How does somebody access the ATS markets?
It's a standard process, like doing any other exchange.
Is there, because they can't probably access that through their traditional brokerage, right? You're not going to go into Fidelity and access it.
Again, it depends on ATS to ATS. I haven't really studied in depth about each one of them. So it goes by like ATS to ATS. There are some which are really easy and intuitive. Some are like little traditional. But it won't be you can take your Merrill Lynch account and then start trading kind of.
You mentioned that you had some success and experience with taking a company to Nasdaq. And so throughout that successful career that you've had, you've raised money a few different ways. But with reAlpha, you chose to use Regulation A. First, explain to us in detail what Reg A is, how it came about, and then tell us why you chose this method or strategy to fund your business.
Yeah, very interesting question. I could have raised money, to reAlpha from, some private equity or, VC firms, etc. I chose this time to, allow non-accredited investors to, being able to invest. What happened was in 2015, the US government allowed through the Jobs Act for unaccredited investors to be able to invest in high growth companies, right? That happened in that year, and early last year, March of last year, SEC changed the guideline that tier 2 companies, the tier 1 and tier 2, there are two kinds of tiers that a company can raise money. Tier 1 is they increased it to 25 million, and tier 2 was 75 million. So we are in the tier 2 raise. So when a company files for tier 2 and gets qualified by the SEC, it can raise up to 75 million from both accredited as well as unaccredited investors. The reason why I chose this time was I saw that, like any big, successful VC-backed company, an ordinary investor will not have an opportunity to invest in that money and ride that wave. It's just limited to, super rich people and super rich VC firms. I thought, like Regulation A gives you an opportunity to democratize this process. Additionally, what we realized was the Regulation A offering investors are also our syndicate members in the future, right? So, for us, it was a way of building the brand, working with those investors and help them, create the new asset class in their portfolio. That is why we chose to use this as a method.
before we go into my next question, I just wanted to ask you, are you able to explain well the difference between accredited investors and non-accredited?
Yeah. Accredited investors are, I think, the latest term is what accredited is. You should have a household net worth of, I think, $2 million. You may have to, check the numbers. And then, you should have at least $300,000 household income. Then, you are considered as an accredited investor. Otherwise, you are an unaccredited investor. That is the difference.
And so through your Reg A offering, are you able to raise money from non-accredited investors?
Yes. Non-accredited investors are also, allowed to invest up to a certain level. It depends on their annual income. So they can invest up to that in the Reg A offerings.
Can you clarify for us the difference between your Reg A offering that you're doing and how you can actually invest in properties, in Airbnb properties through reAlpha? Explain to us and kind of explain the distinction there.
Yeah. So with the Reg A offering, the investors are investing in the company, the common shares of the company, right? That means you are investing in all the properties. Whereas, we chose the path to use this so that, we can buy a larger portfolio of properties. See, with the 75 million, we have a term sheet for a $200 million kind of debt facility, a combo of that, etc. Eventually, we should be able to buy up to $750 million worth of properties. So, as we, go to probably 100 plus properties, we will be able to allow individuals to, almost like go like a property shopping kind of thing and then pick, properties and then invest at a property level. We are looking at some new technology solutions for that. We are in the early stages of that discovery. Once that happens in the next few months, through our reAlpha app, which is managed by a broker dealer, we should be, allowing people to, invest in individual properties. So at that time, you are a individual property investor. Right now, you are investing in the all properties of reAlpha, a portfolio of reAlpha.
We talked a bit earlier about recession and laws and regulations increasing, but what other downsides do you see investing in short-term rentals, but also what do you see as potential risks for your business?
I mean, see, macroeconomic, issues, if it hits for everybody, right? It's not just for short-term rental, it hits for every other industry, whether you are a restaurant, whether you are, a movie or anything, right? Every industry gets hit in a recession. So those risks are, common for everybody. From a reAlpha specific perspective, obviously, things can, be, if our algorithms are wrong or things like that. That's why, we are trying to put as many checks and balances so that, we don't make the mistakes that, some other companies have done in the past. So we are very cognizant of those kind of risks, trying to every day work on mitigating those risks. Obviously, we are a high growth company, fast, software, driven, etc. So we want to make sure that we avoid the mistakes that others are doing. As we make progress, we learn from others, right?
Outside of just what you're working on with reAlpha, how do you see technology continuing to change the real estate industry?
Yeah, see, the latest trend of, buying, metaverse and land on, decentralized land. Those are the early stages of revolution. Very difficult to say how things will evolve, right? This reminds me, of 2000 when the internet revolution took off. If you remember the late 99, 2000, a lot of, stuff happened and, a bunch of companies died, but, an Amazon got created, a Google got created, etc. Right? Those companies, eBay, and things like that. Right? Those were the companies which rode the wave, went public, and then sustained and grew and grew. One of them has, two of them. Both Amazon and Google were the product of the .com boom. Today they are $2 trillion kind of companies. Right? So we are in the early stages of the revolution of the Web 3.0. That is one of the famous, you are hearing everywhere, right? Everybody is talking about crypto and NFTs and Web 3.0, etc. That is, we are at the early stage. right? Like companies will figure out new business models, new decentralized ways of doing things. I think real estate is ripe for that because of the number of transactions that are involved, and the archaic nature of the documents and all the problems that we discussed in the beginning of this conversation. It is ripe for disruption. Question is, who is going to lead? Which platform is going to lead? Yet to be decided.
That's exactly what I wanted to ask you next was, do you see the blockchain and smart contracts kind of replacing? I mean, we mentioned before, you still have to sign all your closing documents. I don't believe there's any, and if there are, there's very few that allow you to do DocuSign for your closings. So it's still going to a closing or getting your documents sent to you and signing them with a paper. And I mean, I've done a dozen or more real estate transactions that are 2 inches thick in documents you have to sign. And I just wonder if there has to be a better way. So I'm wondering if the blockchain and maybe smart contracts, part of that Web 3.0 movement, are going to be maybe the solution.
Yeah. So, absolutely blockchain and, smart contracts are the way to go from a real estate data and real estate record keeping, right? Unfortunately, states are still, again, this comes under the state domain, right? Every state will be different. What if, like you are in one state, on Friday, we closed one property and we observed that, one state allowed, DocuSign. I was surprised that, DocuSign itself is considered as a revolution, right? So the way title industry is literally 10 years behind in technology. And then, like all the, quarter inch or, half inch thick documents and, who knows what you are signing, and what if the pages are changed, things like that, right? Blockchain and smart contracts will allow a transparent, efficient, trusted kind of transactions that happen between buyer and seller. And forget the payments. That's yet another massive problem, right? People even today want check to be written or wire. Wire is the most inefficient way of doing any money transaction, right? So can it be electronic crypto kind of transaction? I think it is. Time is coming. See, in technology, what we have seen, right? Initially, it will happen slowly, but eventually it will become fast. We are at that somewhere in that curve, we're towards the end of that slow transition.
I've seen some really interesting blockchain and crypto kind of escrow programs that I think would be really interesting for real estate. But yeah, I buy all of my real estate out of state. I live in the Boston area. All my rentals are in Texas. And every time that I do that, they FedEx me overnight this probably inch thick documents that I need to sign. And I sign 150 pages, then I send it back to them. And I just think to myself, like, why can't we just do this electronically? We'd save money. It'd be faster. It'd be probably safer, more efficient. And then you also get a check at closing. You go to the title company and you literally get a check. And it's like, why can't we just do some sort of transfer? And I think crypto or blockchain or some sort of Web3 development is going to solve that problem.
Right. Like notarization, you'll have to, sit in front of a notary, give a physical, license, and then, you have to sign on that. Every step, as I said earlier, every step can be disrupted.
Earlier in the show, we talked about how you're a technologist who is making their way into the real estate industry. And as an entrepreneur myself, I can only imagine that you probably struggle a bit with the shiny object syndrome. We talked about how real estate is so far behind. So as a technologist, you could see all of these different ways or different products or services or ways that you could make money as all these different business models that there are. So how do you personally focus on what's important?
Yeah. So, what we are looking at is what is a burning problem, right? We are addressing some of the burning problems. And we believe that, if we are facing the problem and the pain is strong enough, work on it and then solve the technology rather than, everything is shiny, everything is, interesting, right? Then, you're like a kid in a candy shop, you want everything, right? You don't want to do that. You want to be, healthy. And, eat the right things. Same way, what we are doing is what are the, critical pain points in this process that is affecting us? and then talk to, like 20 other, 50 other, 100 other players in the space and see which one need to be addressed.
Do you do anything specifically to kind of fight off those other ideas that come in? You've decided one thing works, you want to work on it. That's the right idea, but then you still have all these other ideas pinging at you. How do you just kind of shoo those off?
That's a hard one, by the way. As an entrepreneur and a technologist and seeing so many opportunities, very hard, right? So, like what we have done is we have built a independent board of directors, really smart people. And I have, I'm lucky to say this, that I have hired really smart people, smarter than me in our team. And they, become the checks and balances for my enthusiasm, hey, let's do this. I say that, but then they'll say, hey, that may be a stupid idea because nobody wants it yet, right? So that's how, and then, having a good board helps me to, narrow down, because they tend to ask a lot of questions. And the more the questions are, you tame down your enthusiasm and then do the right things.
I know just that process of being asked questions can be super helpful, because you can be really excited about something. People start asking questions, they start diving in, not to change your mind or act like you don't know what you're talking about, but just because they're genuinely curious, and you start explaining your answers to them. And then you start thinking to yourself, oh, maybe I don't actually want to do this. As you're explaining things, you're like, oh, maybe they're right. Maybe this isn't the right, maybe strategy or product or service for us to go to market with. That's worked really well for me. People ask me, well, why do you want to do that? And they'll just dive in a little bit. And when I go to explain that to them, I'm like, oh, maybe I actually don't want to do this. And I kind of go back to what my original idea was.
Well, one of the basic aspects of reAlpha culture that we have designed and harnessed every day is to say that everybody should hire better than themselves. So the more better people that we hire, the rigor of decision making comes, right? There are smart people, and when you have smart people, they'll ask the right kind of questions, which leads to right answer. So it's about finding that who, then the how part first. That's where all the transformation happens.
Yeah, I know the author of, actually, let me look up his name so I can say it. Good to great. We just had him on the show. Oh, Jim Collins. I know one of the best-selling authors, Jim Collins, is really big on that. He has this analogy around buses, and he says, just get as the right people on the bus. Don't worry so much about where the bus is going, but get the right people on the bus. And he's very adamant about that same strategy as well.
Good to great.
Yeah, Good to Great, Built to Last. Those
Built to Last. Books. I've read both of his books.
Speaking of books, what would you say has been the most influential book in your life?
Oh, I read a lot of books, at least one a week, kind of. That's been my path for a very long time. The most important book that I have read is a book called Siddhartha. I don't know if you have heard of that. It's a 1970s book, I think. A very small book. So there are three principles in that. You can think, you can wait, you can fast, right? So thinking, waiting, as in patience, and fasting, meaning control. Those are the three things which helps you to, bring, taming the monkey mind. Like the Buddhist philosophy is, my mind is a monkey. It can jump from item to item, right? How do you tame that? That's probably one of my best books that I've read so far.
Can you spell that title for us?
Siddhartha, Siddhartha.
All right, awesome. I haven't heard of that book, so I'll be sure to.
A small book, probably 100 pages or something like that.
Some of the smallest books are the best books.
And the other one is The Greatest Salesman, right?
I've heard of that one. Yeah, I've heard of that one, but I haven't read it yet.
Yeah. He was a classic writer.
Before we give a handoff to where people can find you, I always like to wrap up the show by turning the tables and letting the guest ask me a question. I learned this from a very popular podcaster named Pomp. He does this on his shows, and I really like it as well. So, Giri, what question do you have for me?
So, your title of the podcast is Investing 101 in Real Estate, right? Why 101? Why is it so complex? Why is it not top 3 or top 10?
Well, we decided to focus on 101 because we didn't want to go after commercial real estate. Honestly, it's mostly because of the size of the audience that we could reach. And so if we were to go with commercial or go to something more complex, you narrow down your audience significantly. And our main business model is growing the shows as big as we can. So we need the biggest audience possible that we can. And so with Real Estate 101, you're going to have the most beginner investors. And so for me, I also felt that when I was getting into real estate, there was a specific resource I wanted that I couldn't really find. Bigger Pockets is great, but I still wanted something a little bit different. And now that I've had some success in real estate, now that I've grown the show pretty big, I want to help give that back to other people. And I want to be that resource that I kind of wish I had when I was at the very beginning stages. So I really want to help people get that first deal that they have, or first couple deals, second, third deal, or even if they've done a couple deals, but they want to maybe buy their first Airbnb. I want to be that resource that they can go back to class, go back to 101 and learn that new strategy from the beginning. And so I just want to be that resource for people that need it.
That's great.
Well, Giri, I really appreciate you joining me on the show today. I really like your business model. I think it's really interesting, and I can't wait to continue watching what you guys do. For the audience that's interested in checking it out, where's the best place to connect with you?
Go to reAlpha.com. That's our website. And GiriDevanur.com is my personal website. And, like LinkedIn, Facebook, Twitter, Giri Devanur. So, you can find Giri Devanur in any other social media. But reAlpha.com is where you will find my profile.
I will put a link to reAlpha and Giri's most popular social medias in the show notes, as well as the books that we mentioned throughout the episode for anybody that's interested in checking that all out. Giri, thanks so much for joining me.
All right. Thank you very much, Robert. I appreciate your time.
Thanks for watching. Make sure to subscribe and hit that notification bell so you don't miss out on our next podcast episode and new investing resources. What are your takeaways and thoughts about this discussion? Let us know in the comments section below.